The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow down 145. Nasdaq is down 87. S&P's off 22. Gold contract down $11.20, trading at $12.11 an ounce. We have silver down 27 cents, $14.50 an ounce. Light sweet crude, check it out, right? Down $1.27, 59.42.
59, quite a number.
Yeah. I mean, 58 is game. It looks to me like 54 is going to be game, which is going to be pretty wild. Notes and bonds are catching a bid, folks. You get the 10-year note up 7 ticks, trading 118. 30-year bond up 12, 137.18. King dollar up 75 ticks, trading 96, 625. Now, King dollar get over the high of August 15th yesterday. Light volume. It doesn't look to me like it's going to stay over this high too long, though. It's basically has light volume again, having a hard time with price. Euro's traded at 113.45 to 1 U.S. dollar. The yen is at 113.84 to 1 U.S. dollar. So the PPI come in hot, 0.6% for September, and we're running about 2.8, I think, for the year. 2.6 maybe. No, 2.8.
We'll have to pull it up, sure.
2.8. Bottom line is that inflation is kicking in there. I heard you talking about Yelp. Now this is quite a move, man.
It sure is.
And what a lot of these equities have done, folks, when I was going through this, you know, even yesterday after the close,
yes, is that
they had good earnings last quarter and they had gapped up, and a lot of them are going back to the gap.
Yeah.
Now this one here is getting destroyed.
Yes.
You know, it's pretty intense, man.
We'll get into the numbers just after the charts, whenever, because
you know, when you take a look at this, what you're going to see is that this baby's firing off. It wants $26. You know,
May of 17.
Yeah, and you can see that it hasn't been tested. That high volume low is just sticking there, man. And number wise, let's see what they're saying. So,
hold on once. So let's see. Full year, they're under where they were looking. 963. They were looking for 938 to 942.
Yeah.
That's their forecast. Third quarter revenue 241 versus 245. There's the big one. Earnings per share 17 versus 36.
Yeah, big number.
Yeah, big number.
So that must be the breaking point for them to put money to the bottom line, because the revenue number is not as bad.
And I wonder if what happens is, you know, maybe they realize they're under revenue, so they start spending more money to increase their revenue.
Right.
You know, so that could cut into the cost. So maybe, you know, maybe they planned on, okay, we won't have to, because, I mean, geez, you can get clicks anywhere on the internet if you're willing to pay for it enough, right? So it's something like Yelp. Maybe they were like, you know what, we're going to miss on revenue big. We got to spend more money and get more, even if that's going to hurt our earnings. There's a lot, but it's a big number to miss on earnings by half.
You know, GE, we go over to GE. Now what you have, folks, is that now you get an analyst coming out saying, yeah, $6.
Yes.
And we know that we've been looking at 535 for a long time. That's that high volume low. 572. It's going there, man.
Yes.
Now, what you have now is at the top of that bar is 1135. The bottom is 570. I mean, the probability goes up much higher. You know, it's just like walking down the stairs, man. You know, the next, it's pretty intense, man. When you think about it. You know, and what we do have with GE, and this is really a big heads up, is that this is on a large ABC structure on the way down to go out of business. That's the thing that's going to be really weird, man. I mean, you know, it took out a B point, monster volume. You know, it doesn't mean that it's going to go out of business, but guess what? I've seen this before, and when they do that, it's like, okay, you know, we'll just see how many more, you know, accounting.
They have a lot of work to do in a lot of different parts of their business.
They do.
Yeah.
They do.
Yeah.
Gold contract. So gold contract tanked today as soon as the PPI come out. That being said, bottom line, you're still going to need a lot more volume, because we have 202,000. You're going into 532,000, I think. 532, as well as 313. Now, I think we'll do 313. We're already at 202. And what does happen, there's no doubt, on Fridays, this market, meaning the metals market, can be really challenging. Big time. Activision, that's getting hit too. Now that's. I wonder if this is Fortnite. I mean that's taking these ATVI. This came down hard, and what this did, we're pulling this back. I think this is one of the other ones that it had gapped higher the last time. No, I guess not. Look at this, man. Holy cow. So this is down from $84. You're at 53. It looks like game there is 47. I mean,
can we pull up their numbers as well?
Yeah.
Yeah, quite a pullback.
Am I still? There it is. No.
Yeah.
Said the slash game marketing budget.
Yeah. And this is all. Oh well, no, that's the day before, I guess. So 52 cents versus 49, right on line with the adjusted revenue. They dropped their earnings per share barely for the year. Let's scroll up a little bit. Okay, there we go.
Outlook, right?
42 cents to the consensus had been 50,
right.
So that's a miss. Oh, there you go. Yeah, fourth quarter adjusted, 64. Consensus was $1.34.
Yeah, going forward.
That's a big one. That's just next quarter, let alone the year, right? I mean, they just slashed $1.34 to 64. Quite a number.
Big number, man.
Yes.
Pretty intense. There's no doubt. And looking. It's going to be interesting here, folks, how the market is set up. Because if I still go over to the S&P, yesterday you pulled back with light volume. It doesn't look to me like this market's done, basically going up yet. Which is going to be pretty weird watching this whole thing shake out because you're coming into 101 million shares. I don't think we're going to do them today. We'll see. You're at 12. So, the real question is going to be is that has the C to a D started? I don't think it has. And there's not much that basically can push this market up. So, it's going to be interesting. Like, okay, well, how are you going to try to get up there and retest that level? If we go take a look at the GDX inside the gold market, those equities, GDX is pulling back with 8.6 million. Now that baby's coming into 134. So that's going to need a lot more juice also in order to get to lower price. If we take a look, let's go inside that NDX and see the strength versus the weakness. And look at that. So you got, it's interesting. So you got Activision down 14, Skyworks, which is the supplier for Apple, down 9. Take-Two Interactive, that's another game player, down 7.5. So let's just look at that.
Sure.
So the low for the year is 92. The high's 139.
They could have had their earnings as well. It could just be a play off of.
Ooh, baby, look at how, that's a nasty-looking chart. Look at what they did yesterday.
Last 2 days, yeah.
So
that's probably, maybe they had their earnings yesterday, and today is a continuation with Activision suffering as well, saying, maybe, hold on, this just isn't them, right?
That went down.
Yeah, so it was. They had their earnings 2 days ago on the 7th. I don't see it dramatically. It's probably in the forecast.
It's going to be the forward, right?
Yeah, because that's not too big of a miss.
What's really going to be intriguing here in that whole business is it the Fortnite that basically is changing the way that these programs work?
Sure.
And if it is, it's going to be pretty intense because both these companies are big companies. Let me just see this for a second.
Oh yeah, $12.5 billion company.
Yeah. I mean, look at that. They were taking in $3 billion.
Yeah, well, they're supposed to for this fiscal year. Yeah.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow down 176, Nasdaq off 116, S&P's down 28. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 176. Nasdaq is off $112. Let's go to our man Mark in New Bedford. Mark, what's going on, brother?
Not much, Tom. How are you? And it's Bedford, not New Bedford.
Oh,
morning,
shame
Mark.
on me. That's right. There is a big difference.
Happy Friday, guys.
I know. I like it. So how's beautiful
Happy
Bedford
Friday.
today?
Hey, I got a question, Tom. Which looks weaker, the Qs or the financials?
Okay, so let's bring up the financials first. So you got the XLF, you're at 2716. I'd say the without even bringing, I know what the Qs look like, the financials do. A lot, because we have with the Qs had a nice expansion with volume on Wednesday. You know, so the Qs didn't have that. I mean, the financials didn't have that. So it looks to me like I don't think that the Qs are done going up yet. The financials might be, though. J.P. Morgan. Let me just look at J.P. Morgan. Yeah, like J.P. Morgan, it got over 111.47. Looks like, you know, if it closes here, it's going to close under it. And then what you'd actually have on the weekly, 110.80. No, on the weekly, it's not going to. It'd have to close 110.81. No, it doesn't look like it's going to. This doesn't look like it's going to be a failure yet on the weekly either. But if the financials are definitely weaker than the Qs and have been for a long time, you know. I mean, that's why
Well,
it's
that's different sayings, but, you know, Apple looks pretty weak, too, so I'm just curious. What the hell is going on with gold? Gold cannot catch a bid, can it?
Yeah, that's you know, it's a Friday, man. It's time to nail gold. That's the number. You know, but there's no doubt that, you know, this will be. Well, we'll see whether. Let's see. We started the show at 10. Well, this is actually slowing down a little right now. We started it with 200,000. It's only 207. That's not a lot. So that's 740, 20, 28. Yeah, no, that'd be a lot. That's 28,000 per hour we're almost doing. So we'll just see how it shakes out, man. You know, what is happening out here this morning also, though, it looks to me like the dollar's going to fail. You know, the dollar got over the highs of yesterday, got over the highs of August 15th, which is at 96,450. Had volume, I think yesterday we did like 21,000. We did 16 the first day. Yeah, well, you only did 17 yesterday. We first took it out with 16. You come down with 29. You come down with 31. You come down, make a low with 34. It looks to me, I suspect what we're going to actually have is this will fail today. And if that's the case, then gold still wants higher price. What's going to be intriguing here, folks, is that when you get a PPI coming in hot, the real question is going to be, does the Fed keep accelerating the rates? Because this is where they absolutely, if you just took what they're saying, that they'd have to accelerate the rates, because as soon as you start going over 2% inflation rate, it's like, okay, man, you're going to let inflation fly? Now, my take is that they are going to let inflation fly because of the fact that I think we're still going to do another leg down in the market. As you do another leg down in the market, what's going to happen is that the bonds are going to go higher. And, you know, I think by the time the weekend's over, I bet when they look at this PPI, you know, we haven't even got the aspect of all these prices that we're going to be paying coming out of China with these tariffs. This is going to be big numbers, man. We're going to pay more money, you know. I mean, if you go to any of these big box stores, Home Depot, Lowe's, I don't care, Walmart, you might as well just say that you're going to China, because everything is in there from China. Sure. You know, so guess what? You're going to pay from 15 to 25% tariff, you know, and we're going to pay for it. So that throws that throws prices up. You know, and this is a big number. So let's see.
Yeah, so they rose 0.6% in September. Yeah. And climbed 2.9% from a year earlier. Right. After a 2.6% gain previously.
And that's now what gets interesting there is that, you know, the beef has always been that number always excludes food and energy, and we've said it a million times. You know what I mean?
So I think it's that number does not exclude food and energy. If you exclude food and energy, it's still at That's what 2.6% and 0.5 versus 0.6 and 2.9. So 2.6 and 0.5 without food and energy.
Yeah. So the energy is really going to be helping this number because we know that energy's come down pretty dramatically. Yes. You know, and that's in October though. Yeah. Yeah. So, you know, I think. My take is that prices are going up anyway. So any type of hard asset to me is going up, because I think that's if they're going to push out 1.3 trillion in bonds this year because our deficit has doubled, then the only way to do that and pay for it is to basically have the dollar worth less money and increase inflation. You know, because it's got to be paid down. Someone's going to pay it. We're going to pay it one way or the other. So.
Tom, one other question I have. You said in the first segment, you think we'll have another leg up before we have the big leg down?
Yeah, I think I'm just waiting for this thing to get tested, meaning that the S&P did a 0.618 retracement. But the way that it's setting up, it looks a little too deviant to me that, you know, it just doesn't look like it's done yet. And what does happen is this, and this you got to keep this in mind, folks, is that we came down so fast, it took a huge amount of energy. I mean, it was a straight move down. And then we went up so fast, and that takes a huge amount of energy. So this thing is going to basically, you know, kind of move back and forth, and the energy has to get built up again, you know. So it just seems to me that it doesn't have enough energy to go down right now. It doesn't have enough energy to go up. And if we come back in with light volume today, that's telling me the probability is much higher. We're going to go higher before we go lower. You know, yesterday, you can see, they died in the vine yesterday. You know, you did 65 million shares. You know, so what also ends up happening is that because we get so many high volume days, a high volume day actually helps the market from basically going down too much, because now you're going to come into like 275, and that's support because it had volume up there. So the top of that bar is going to be support. You know, so I think it's just a time issue at this particular point, and you know, who knows where the next deal is going to come out of, but you know, that February 9th high volume swing low, man, I think that's the benchmark, and that benchmark, you know, is a couple 100 points lower, and it's like, I should know this number by heart, 25.32.69. You know,
Tom, you need a cheat sheet.
Yeah, no, I just got to remember it. It's all right.
Just remember, it's 250 points from where we're at right now.
Yeah, right. But it's set up, you know, see, when I put this, look at this, when you put this, folks, on a weekly, too.
Oh, man, it's been crazy.
Yeah, it's a nice setup to try to get down there.
I mean, the last 6 weeks just have been wild, starting off in that beginning of October, you know, huge moves down every week, and then the last 2 in November, huge moves up. And same deal when you were looking at, you know, February.
Yes.
It was all 2 weeks. We went from the high to the low.
Yeah, and then you can see that what is interesting is that it took, look at that, it took, what's that?
These are weeks, right?
Yeah, it took like 8 weeks to get back and even try to get that test on the S&P. Cooking, brother.
All right, Tommy, thank you.
Mark, thanks for the call.
Have a great weekend, man. Stay right there, folks. Come right back. We have the Dow Industrials right now down 149, Nasdaq off 111, S&P's off 24. We'll come right back.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials down 140. You get the Nasdaq off 105. S&Ps are off 23. Let's go to Mike in Loveland, Colorado. Hey, Mike, what's going on, brother?
Hey, guys. Good morning.
Morning, Mike.
How you doing?
I'm well. It's woke up to 16 degrees.
Wow.
Welcome
now
to
that's
winter.
quick.
It's chilly.
The teens.
But the sun's out, the sky's blue. That's
Yeah, in Colorado, folks, that sun is gorgeous in that blue sky.
It's a different world as long as you have that blue sky and the sun.
It is,
yeah.
and so even though it's 16, so well, let's see, it's only. It's at what, 8 o'clock in the morning there, right? 8:30. So by 11 o'clock though, it'll be like 40 degrees or 45 or something, right?
I know. It'll be a nice day, but it cools off at night.
Yeah. Get those long johns out.
Did you guys know that Loveland is right next door to Fort Collins?
Oh, is that where it is? Okay, cool. I'm familiar with Fort Collins. Okay, nice. That place grew by leaps and bounds. Oh my God, that's crazy.
Yes, it is. Yeah, we bought our house 8 years ago for $255, and it's now worth almost $500,000.
Yeah,
good for you, man. That's awesome. Yeah,
pretty nuts.
I'll tell you.
Go ahead.
No, we were out there. 94, I think the office opened. 95. 94. No, 95 and 96, I'm not sure. But that was all ranch land, man, as far as you could look. I remember that one intersection of Fort Collins. There was only one intersection, but it was like, I saw the moving out from Denver. I mean, it went from Broomfield and just kept going, man. And if you've ever seen this, folks, it's hard to comprehend, isn't it, that how many thousands of houses they actually built? It's like...
Yeah, they have plans to build like 20,000 houses in the next few years.
I know.
In Loveland.
Yeah, I had a hard time even getting my head wrapped around it, but every time that I go out there, you go over these hills, and it's beautiful. First you see hills, and then all of a sudden, as far as you can see, all beautiful houses. Sure, I mean, just up and down the hill, and it's amazing how they could sell them that quick, but that's what happens, I guess.
Yeah.
Right? Yeah. So
I was calling because I just looked at the IWM on the weekly chart, and the volume is pathetic. So it looks like we have a very significant failure on price and volume, and I think that doesn't spell good things for IWM next week.
No, I agree. I haven't pulled the trigger yet, but I agree. And it's like, you know, the IWM is still the weakest index. And you can see on a weekly basis, you actually have a major failure if we close right here. 154, well, actually 154.89 it would have to be. And we're at 154.98. But yeah, I mean, it's there. And what's sticking out on, you can see this with the IWM, that is the old infamous February 9th number. Yes. You know, and this thing is like a monster, 142. Yeah. I think it's just a patience deal, Mike, at this point. I just have some patience, you know. I don't think you're gonna miss the shot position. You know, when you just because the market, yeah, you get it down 24, but this is a dull market right now. You know, it kind of did its thing. It's moving around. I just don't see a lot of conviction in the sell here. You know. So when you don't get conviction in the sell, it's telling me that, hey, guess what? Something's going to pump this thing up a little. Do you know what I mean? And like when we were just talking, I think it was Jason yesterday. All it would take, you know, is when is that G20? All it takes is a good tweet from Trump that, hey, now we got a deal, whether he has one or not. But guess what? The market might believe it for 20 minutes. You know. And then you get the test. My point is this. I think where the short position comes in is that you get a test of the highs of Wednesday. It gets over it, closes under it, has lighter volume, bang, that's the number. You know, because, see, that Wednesday, you know, it's not that it has huge volume, but we had an expansion of volume, man. You know, so most times that thing likes to get tested.
That's true.
You know, so.
All right.
Okay, man, you have a great one, a safe one. Thank you, man.
Thanks, Mike.
Let's get over and take a look at Canopy. So you had, when Trump got rid of Sessions, Canopy, all the pot stocks go up.
Yes.
You know, and now Canopy's pulling back.
Yeah.
Now, that being said, now, this is going to get really interesting here, folks, and we've talked about this before. What has happened is that Canopy just did a deal, or they're doing a deal with Brinks. And what the deal is, let's see, Brinks has reached a multi-year agreement with Canopy Growth to provide secure logistics and cash management services for the cannabis company, including international shipments of weed, the company announced Thursday. Now, what's going to get interesting is that, if you remember, when Canada was going legal, the Sessions came out and was basically saying that, hey, listen, man, Now, this wouldn't be for U.S. citizens, but if you're a Canadian citizen, they have the right to ask you on the way in.
Yeah, so you're talking about immigration from Canada, the borders, in terms of, they had said that anybody
just
doing business with
pot companies
in Canada was violating U.S. laws, and that you might not be allowed in the U.S., and that's what we're saying.
Right. And
how many employees do you say Brinks has? 63,000.
Yeah, and the big thing there is that you better not lie to a federal officer.
Yes.
That's what's also in there. You see what I'm saying? Because then you get a freaking federal crime. That's like, okay. So now the question's going to be just like, what's going to happen with all these big companies? Right. You know, bottom line is that you're talking Brinks.
Yeah.
You know? So this is going to be wild watching this whole thing shake out. You know, well, hey, listen, the other side of that is that we'll see if things change as we go forward. I don't think they're going to myself, but let's go to good old Tilray and look at Tilray for a second. This is the poster child, of course.
Oh, back down to 109.
Oh my God, this thing is sick, man. Look what this had done, folks. This had gone to 109 to 142 that day.
Yes. That day, Wednesday. Just it's crazy how it is.
Right. And now you're back to.
And even yesterday, it pulled all the way from 134. The low was 115. It closed at 118, and you're still down another 9. Yeah.
Yeah. Unreal.
Yeah.
Pretty. This.
You want some volatility? Those cannabis stocks will give it to you, man.
Yeah, big time. You better not stay overnight with them, though. Until listen. I think that my take is there. When we look at them, they're gonna come back to earth, and like I want to try to get Canopy somewhere around 33. Because then, that's where we broke topside from, and you can see there's still a gap there. You get a nice pop there. Canopy does have a high volume high. That's why imagine if you're in a consolidation between 33 and
60.
Yeah, that's a decent consolidation. GE, GE is going to be in the. What do you call those case studies?
Yeah.
GE is definitely going to be in a case study
of
because
course. Anytime you have a company that's basically one of the largest companies in the entire world,
right?
Possibly being extinct.
And you can see, it's like, wow. I mean, all the way.
Obviously, fundamental errors were made at a variety of points along the way for that to happen.
Big time, and
because it's not like a foregone conclusion. I mean, we see the likes of Google. Just now, we're going on 15, 20 years of some domination, and it's not a foregone conclusion that happens. Even Facebook, they had to pick up Instagram, which might have been one of the biggest acquisitions, best acquisitions ever in terms of buying it for $1 billion. Now it's worth at least $100 billion.
Imagine that.
I know. So those types of, and even Amazon as well, not a foregone conclusion, kind of saying like they've made correct decisions along the way to stay in the forefront of everything.
Right.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 131. Nasdaq is off 95. S&Ps are off 22. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 115. You get the Nasdaq off 91. S&P's down 20. If we go over to Roku for a second, ROKU, I think.
Yes, you got it.
So this baby comes out with numbers. Low for the year is 23. The high is 77. You know, took quite a beating here. You know, and this is one that came right back to the,
yes,
you know,
their last earnings.
Yeah, their last earnings. And if we take a look at this, let me just see this here for a second. So this company here, where are you?
Right there, right?
Okay, so the estimate, I see what happened. Okay, so the fourth quarter revenue estimate was 258 million. They're going to come in with 255 to 265. The loss per share, this is what I want to look at, because it seems that this company, as well as Spotify is even a bigger number, but it looks like, yeah, so this company here, what's really wild is that you can see the gross numbers, folks, you know, are pretty cool. I mean, you know, 728 million for the year. But yet they're still going to lose money.
Yes.
And next year they're going to do 986 million, and they're still going to lose money.
Yes.
Now watch this with Spotify. This blew my mind.
Spot. Yeah.
Yeah. Is that this company here? The low for the year is 131. The high is 198.
Right near that low.
Yeah. Now, when you take a look at this, you're going to see it's been on a one-way track on the way down. And, you know, this, it looks to me, I pull up the public, like, you can't find it, but it looks like when it first started traded, you know, it hasn't been out there, what's that, April of 18. So 135 to 169 is the first number. But wait till you see this. This is like, it's really wild. Now, this is a company that is taking in this year $5.3 billion.
Yes.
And is losing $3 a share. And next year they're going to take in $6.7 billion and lose 79 cents. So it's like, when I look at that, it's like, wow, man, that means that they have to take in, they have to get to the point of like almost, what, 10 billion or something to basically get into even, maybe.
I wonder how everything's structured. I mean, they're paying for content, right? They don't produce any music. They got to pay for the licenses of that music.
Right.
It could be that they're paying for the amount of views you get, where it's literally they're caught in an endless, where even if they're increasing the revenue,
right,
they're only increasing the revenue from more views, and guess what? Anytime they get more views, they have a deal that they have to pay more out for licensing, because then they have views that they have to pay the artists for.
Right, it's intense.
Yeah, I mean, Amazon has that same, Netflix has that not same deal, you know, they're profitable, but as in like so much money on content, and whether that's sustainable.
Yeah, no, that's my point.
Right?
It's like,
no,
okay,
I agree, right? I mean,
so you have 181 million shares outstanding, and I just can't imagine taking in $10 billion or even $6 billion and not making any money.
Yeah,
it's,
I mean,
you know, and they're growing like leaps and bounds. You know,
yes.
You know, they're growing by 34% in the U.S., 29 in the U.K.
Yeah.
You know, 43 in the other countries.
Yeah, and that's the 3-year, though, just to put it, because it does look like they're slowing a little bit in terms of they went from under 2 to over 4 from 2015 to 17, right? So they more than doubled in 2 years. They're not going to more than double from 17 to 19, just to put, you know, as in.
Now, do you use Spotify?
No, I don't.
Okay.
Yeah.
Do you know what I'm trying to figure out what the difference is in a Spotify or Pandora? Do you know
I've used Sirius for a while, and so I'm not as familiar with both of those products to really compare.
Right.
I'm just not.
Pretty wild, though. I mean, that's a tough business, man. There's no doubt, you know.
Yeah.
Big time. So, market-wise out here, you can see. Let's look at the volumes for a second. I think this is going to be a slowed down deal. Yeah, you know, 197 million. That's not a lot of volume out here on the NYSE. And on the Nasdaq, the Nasdaq's had some volume. 644. That's some decent volume for an hour and a half into the marketplace. Oh, let's see. Yeah, close to it.
And I'm just reading a little bit more about Spotify even. So management cautioned that margins were likely to be compressed by increased spending on research and development as well as content. So that's exactly what almost we were just talking about, right? In terms of not only is it tough already to make money, that guess what? It's going to get tougher. They got to keep being innovative, and they got to keep paying for the content. And they reiterated that fourth quarter revenue forecast fell short of estimates and cut the high end of its projections across the board. Yeah, that's so they have limited runway for error, right? They're competing with Apple. They're competing with Pandora. They're competing with Amazon.
Right.
And you're in the business where you have to pay billions of dollars for your content. You want to compete with Amazon, the business that you got to pay billions of dollars just to break even?
Or Pandora.
Right.
I mean, I don't pay anything to Pandora. I just happen to use Pandora, and I've used it forever. So it's like switching a station. You know what I mean?
Yes.
If you're happy with something, it's like, okay, man.
Yeah.
You know.
I mean, that's a really tough one. You know, just in terms of just like that, competing with Apple and Amazon. Both have music streaming services.
Yeah.
You don't want to compete in a company where Apple could run that at a loss if they wanted to. You know, that's where you're let alone we know Amazon loves to do that.
This would be a one-trick pony.
Yeah, you know, you can't compete with those companies. They're doing 8 different things. That's what Amazon has such a stronghold on.
So one of the targets want to take a look at the XLE.
I think we have oil back above $60 too as we talk about that.
We'll take a look.
Around.
So you get the XLE, the low for the year is 64 rather. The high is 79. And yeah, see, this is going to be pretty cool. This is not done yet either. My take, I wouldn't be going long this. I mean, if you want to go long for day trade, it's not bad. But you know, you hit a low today of what, the 67.34. I suspect it's going to try to test the $70 level once again. We take a look at this. Let's go to our man Tom in Plymouth. Yeah, this is filling up the gap. Hey, Tom, what's going on, brother?
Hey, good morning, Tom and Tommy. How are you?
Morning, Tom.
Yeah, you going to take your wife to the Four Seasons tonight on that SCO trade?
Wow, this oil is finally caught it. You know, I am on it.
Yeah, you're definitely on it, man.
Quite a move.
So I flipped it this morning from the SCO to the UCO.
Okay.
And now I'd like to see if I should just get out of this UCO or maybe let it ride, take half of my pot off there, or what do you think?
Can we go where the UCO is?
Yeah, so the UCO, folks, is the Bloomberg Exchange Traded
Pro Shares Ultra Bloomberg, right, going off,
That is 200% daily performance of the Bloomberg index. So this is the positive one, right?
Yeah, this is the bull.
Right. I just traded to the end of the day, Tom. I wouldn't. Wouldn't. You know, I wouldn't go over the weekend because oil looks to me 58 was the first number, 54 is the next number, and that's what it looks like it's going. Because if you look at
get back in that SEO, but I think maybe Monday or Tuesday, something like that, before Wednesday pops up with the oil numbers again.
Sure.
Yep. And see, if we go over what you can do too, which is pretty cool, man. You can start gauging the oil market by the gasoline market. Here, stay right there, because I'm going to show you this gasoline market has already got a lot lower, and time-wise, I'll show you it's trading where the crude oil would be like 54 right now. Stay right there, folks. Tom, Tommy, and myself, we're coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man Tom from Plymouth. We are talking energy. So you can see, Tom, the way that the gasoline market is set up, right? You know, we're already back to basically the top of the consolidation that's been out there from 2016 going all the way over to like 2017, to October of 2017. And that number inside the crude is $54. You know, you get a little spike down here that the correlation there would be 165 in gasoline, and that's where the 58 is in the crude market. So I think that's where we're going, man. That's what it looks like. So
that sounds like a great Christmas present to me, with oil, you know, dropping fast. So yeah, I might get out of this very shortly and look to jump back in SEO.
Next week.
I know you probably went through gold already. I missed the beginning of your show, but I'm in the dust. I'm wondering if I should get out of that too, or just let that ride.
I'd trade it all day. I wouldn't go over the weekend with it, man. I'd trade it all day, though. Yeah. And what to do, just put a stop right now, right in it, because intraday, like you can just put a stop right over the.
I might just take it all. I'm up $2 on it. I got it in 32.86, so I might just take it all and go.
Yeah, why not? Hey,
which one is that dust to? If you get
a dust is 3 times inverse correlation.
Okay. Yeah. Direction daily bear 3 times. Okay.
Yeah. So hey, basically take it and go have a good time for yourself, man. It's the weekend. It's a beautiful thing.
Take the money run. I think that's what it's all about today. Yep.
Cooking, brother.
Thank you, guys.
Thanks, Tom.
Have a great one. Have a safe one. Stay right there, folks. We got Fast Market coming up next, and we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon.
And happy birthday, man.
Happy birthday.
Happy birthday.
Yeah,
I love it.
I got it. I got a birthday, folks. Marine Corps birthday tomorrow. Veterans Day the next day.
It's a weekend. Birthday, it's Friday. Weekend. Gotta love it, man. Totally.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.